welcome you with us here in Business Today. I'm Aabha Bakaya with me, Shailendra Bhatnagar. We're here to take you through market opening and all the early morning action. Shell, good morning. Overnight is looking really good. We did see a nice bounce coming in thanks to the tech rally, and it's of course a short week and a festive week over there on Wall Street, so gains are intact. But on Indian markets, we have seen some amount of profit booking setting in.
Absolutely right, Aabha. Very good morning to all our viewers on BTTV. We are entering the final day of the FNO expiry for the month of November. A bit of a back foot as far as the Nifty is concerned. Yesterday, the index saw signs of profit booking down about 108 points, and it started on a mild back foot today. So let's hope 25,800 Aabha holds good on the Nifty, and there are two very important constituents of the Nifty, the IT space and the private banking space, which is doing immensely well on the long side. Let's be very clear, the broader markets are in a zone of profit booking. The Nifty 500 is underperforming the Nifty, as also the Nifty 100 and the 200 indices. So profit booking there in the broader market, but IT and private banks, in particular Axis and AU Bank, are doing pretty well. IT is doing strongly, so Nifty should be sideways to flat in today's FNO space, and 25,800 should hold.
Okay, we saw losers across the board, and we'll talk more about that in just a moment. But the S&P, as you just saw on your screen, saw about 1.5% gain. Nasdaq was up about 2.5–3%. Best day since May, and that's because the tech majors were on fire after what's been actually a tough month for the sector. So we saw gains across, and overall US stock futures a little changed despite that rally, and gold is now right back up above the 4,100 mark on stronger Fed rate cut bets, as well as, of course, a weaker dollar. Meanwhile, oil is steady at $63 a barrel on US interest rates, as well as Ukraine peace talks, all in focus there. Oil margins, marketing margins have also been really good, so OMCs are back in the limelight, and we'll see how they open up in today's trade. Asian markets higher, all indices up nearly 1%, and it looks like we're set for a bump up now, Shell. It looks like we might see some amount of green on opening, at least that's what we can see in pre-market trade. So it clearly looks like perhaps the global momentum or some of these factors are playing into sentiment. Still a little early to tell, but it's possible.
Yes, absolutely. Aabha, I'm an optimist to the core, but you see, one has to look at the practicalities of trade as well as markets. You can make out that at 26,200, 26,300, the market is a little fidgety. It approaches an all-time high, hits it, and then retraces. I would imagine that let's get this monthly expiry out of the way. The broader structure is not looking good for bulls. I couldn't find a strong bullish candidate in the FNO space in the Nifty, apart from Eicher Motors, to some extent AU Bank in the FNO space, and of course Coforge and Persistent. So that rally that we've seen in Bharti, M&M, L&T, Reliance, SBI is pausing a bit. This is not the end of the bull run. It's just a pause for the monthly expiry to sort of let steam, and then the rally will assume upwards. 26,300 we have seen, a record high has been hit. Now a bit of stand back and quite kind of an environment for 1 or 2 days. It's a consolidating phase. This too shall pass.
All right, let's also take a look at some of those brokerage views coming in, particularly on the OMCs. We've got Investec downgrading. It's actually a downgrade coming into a sell. They're actually preferring to play the refining cycle through RIL. We've also seen some amount of interest, however, in refining margins. So Singapore GRMs have doubled in less than 2 months. However, OMC profitability is sensitive to marketing margins, and those have weakened. So Investec is actually downgrading to a sell. But otherwise, we're actually seeing OMCs in action, Shell, on those marketing margins. So slightly mixed views coming in there. Investec also saying that same diesel cracks that are lifting refining margins have pushed diesel marketing margins from about 4 rupees a litre a month into negative territory despite soft crude. So if diesel cracks remain elevated, they could erode earnings. With OMC stocks up 20-25%, markets do seem to be overlooking this risk and they've gone in for a sell. What do you make of that?
Aabha, I would imagine that RIL also has a very strong telecom component, so it remains one of those bedrocks of your long-term portfolio. Remember, it also has a very high weightage on the Nifty. I think it's ranked second after ICICI Bank. I would imagine it's a portfolio stock. Nobody makes money on RIL intraday. You just have to hold the businesses for the longer term and then wait for the stock to deliver market beating returns. So RIL is mostly an eternal buy around its 200-day DMA, which it was in mid of November. From there, a nice bounce back. The markets up 40 points in pre-open trade, and amongst the top gainers are Max Health 1% higher, 1168. Siemens 1.4% higher at 3200, and amongst the most active Aabha, you have Bharti Airtel, HDFC Bank, Infosys, and of course Axis Bank and Bajaj Finance. Aabha.
All right, let's take a look at some of the other stocks in news this morning. As we said, markets a little sideways, but we've had a whole host of stocks on 52-week highs. I think some of the auto names there, Sheila, what we were tracking yesterday. IT, let's see whether or not they continue that bump up after we've seen the kind of action that they saw yesterday. Paras Defense, they're looking at a MOU with the Inter-University Accelerator Center to develop commercial-grade MRI magnet systems in India. We've got Paras Defense in news. HUDCO, meanwhile, has signed an MOU with the National Institute of Urban Affairs to design cooperation against urban infra and development initiatives. It's non-binding so far, but that's a new one coming in there for that company. Diamond Power has said it's received an LOI from Adani Energy for the supply of conductors worth 276 odd crores, and Suntech Realty has announced that its wholly owned step-down Dubai subsidiary has received an order from the London Court of International Arbitration confirming the withdrawal of the claim and termination of arbitration with its JV partner, which is good news for a Suntech. So lots when it comes to order wins, tie-ups, also in terms of other infrastructure companies. Seagull India has said it's received an LOI from REC Power for the establishment of a 400 by 220 kV Valgao substation. This is the news coming in there, and it's required to furnish a contract performance guarantee of about 10 crores within 10 days there. So lots happening when it comes to infra, power, defense, railroad, that entire segment, Shell, and we're seeing that every day. There's just news of order wins, deals being signed, LOIs, MOUs. So, we did see a little bit of a negative rub-off of HAL yesterday when it came to the defense segment. But today, again, a lot of newsmakers. We've got BEL, Safran signing a JV as well to manufacture a precision-guided weapon. So, really lots to pick from in the space.
Absolutely, Aabha. There is no doubt in my mind that there is enough and more news to, drive the market on the large cap. But look at the small cap index. It's way below its all-time high of 19,650. We are somewhere like 17,700. So this has been a large cap rally. Undoubtedly from October onwards, actually from August onwards, when the GST rate cuts were announced, but nothing much is happening on the small cap space. If you look at the stock prices, the index is actually meandering around 200-day DMA on the small cap space, and that's the pain point because everybody and his mother has small caps and mid caps in their portfolio. So the broader market is at a record high on the Nifty, and here nothing is happening. In fact, prices are getting cut on a very regular basis. So selling pressure there, and alongside it's the Nifty stocks which actually no retailer holds. So that's the pain.
All right. Dhamesh Kant also joining us this morning. Dhamesh, good to have you with us. What's your view on the market? It's a little sideways right now, but are you reading into some of the good news or waiting for a bit of profit booking?
Yeah, good morning, Aabha. Good morning, Shelji, and good morning to all our viewers. I mean, as Shelji pointed out, I mean, the market is very, illusionary in nature, where you are seeing the headline indices almost at all-time high, 200 points here and there. It's like just 1 percentage point away from all-time high. But in between that, even in large cap, the participation is not that great. It's very narrow kind of a participation which is happening. And the other pain point is it's not only lack of participation, but it's a selling which is happening in the mid and small cap and a few of the large cap counters. So the very harsh. I mean, yesterday's market, if you look outside the basket of select names, so 4%, 3%, 5% kind of a cut was happening. And this is coming when the earnings were not that bad. I mean, the earnings were okay kind of earnings on the large cap front. And if you look outside the large cap basket, so we track around 500 companies on aggregate level, and outside of Nifty 50, the earnings were around 20-21%, barring the IT companies. So that was the kind of traction we have seen, and this is coming on the backdrop of all the tailwinds, be it direct, indirect tax cut, and the inflations are low, and expectation is there will be further rate cut. So a bit of challenge out there in the market. I think it has more to do with the FII flow. So most of the rebalancing was happening between India focused fund to some traction into China, some allocation out there. But I think by this time even that trade should be through now. So from here we should be looking at a more stable kind of a market environment and look at the pockets where things are pretty balanced. So it's difficult to catch the bottoms always, but yeah, if you are invested here, you start investing here in the select good sectors, then I think the downside may still be there, 10% or 15%, but beyond that the price erosion should not be there. And when things start picking up, mostly in the month of January is what we are expecting, when solidarity to come back into market, then the traction will take you a much better returns for the year.
Namaste Dharmeshji, a very warm welcome to you, sir. What have been the green shoots in the third quarter earnings that you've just seen gone by, especially in the mid cap and small cap space, sir?
So Sandy, it's more of a divided kind of a green shoot. Like banking, entire BFSI had a pretty decent set of earnings as far as internals are concerned. So the growth was there. Growth came back into the retail space, personal loan, home loan segment, and the vehicle finance segment. These came back. What happened was the profitability got marred because of M2M provisioning of the treasury income. Now again, if there is an interest rate cut, we are expecting at least two interest rate cut to come by. One maybe in the month of December and the next going forward in the January and Feb. So that will again have a drawdown on the NIMS, so which will again pull the profitability on the down. So from trading point of view, this will always be a headwinds for the stock price traction. But fundamentally, structurally, if you are buying for 1 year, then you should be better off. So BFSI is one space which came out with a very good set of numbers. Defense, we have always been a buyer in this space for the last 2 years, and the reason is it's been structurally into a very sweet spot. So from Indian offset partner to make in India to now almost 64% of the components are to be made in India in next couple of years, and MOUs are indicating that. So any declines out there, it's being a lumpy business. Quarter on quarter is a wrong way to look at it. If you're looking at it on a yearly basis, and book to bill ratio, which is 5 to 6 times, and it's swelling as we speak. So that is one area which is looking pretty well. What was a surprise was a pharma space, where I mean companies like Lupin, Jadis Life Sciences, Torrent Pharma came out with a good set of numbers. Even Sun Pharma numbers were pretty strong. So I think there the traction will be there with currency depreciation playing out. It will be again an added tailwind to the pharma space and specialty chemical space. So that area is also like Privi specialty is there. Then you have Laurus Labs, then Naveen Fluorine, all came out where Ether industries. So wherever they have been a focused specialty chemical kind of a company, there the traction has been pretty good. So don't get confused with a normal chemical play. You have to focus on select plays. So these were the areas where traction is likely to come forward. Auto was there in the making because of GST cut. So that was expected. Auto has to be seen how November, December plays out for further traction to happen. But more or less, these are the sectors where things are looking pretty solid as of now.
What about IT? Dharmesh, let's talk about IT because, really strong rally continuing overnight. Okay, we've got the opening bell as well. Let me first see the upticks and see where we're at this morning. The index is just about flat right now, but let's take a look at some of the gainers and losers. Nifty Bank also quiet this morning. Let's pull up oil and gas, see if there's any impact on those OMCs as well as some of the refiners and what the action's looking like on that front. Quickly pull that up for you. About 0.4% lower, so we'll look a little deeper into that in just a moment. Let's pull up IT and see how that's performing today. And get a sense of really where the action is on that front as well. The OMCs are actually seeing a little bit of correction coming in today, which is really what some of the brokerage reports had anticipated. IT is also cooling off right now, so we've got some amount of a cool off coming in there after yesterday's rally. Let's see some of the other indices. We're a little in red across the board this morning. Just marginal, but definitely some amount of profit booking coming in there. TCS, the only one who's holding out from the IT pack. Let's pull up some of the banks. Let's pull up Reliance. But overall, it's looking quiet, Shell.
Absolutely, Aabha. As I had mentioned, it's the FNO expiry, so the Nifty will sort of meander between 25,850 to 26,000 and then call it a day around 26,000. Let's see how it goes. But pharma in top shape. Look at Markson's. Look at how strength is coming into Dr. Reddy's. Cipla in top shape. Remember, Cipla is amongst the top 10 stocks in the large cap portfolios of many funds. So that's looking good. Dr. Reddy is 1.2% higher, 1241. No stopping Glenmark and Laurus. So these are spaces that are doing pretty well. The highest beta counter, Aurobindo Pharma, 0.5% higher, 1200. But broader markets, as you point out, are sort of even Stevens, 1100 shares in the green, 1100 in the red. The rally now in metals. Metals is something that one needs to look at. This is the swing trade in the making on the long side. Let's get Dharmeshji's view on the metal space. Any favorites here, sir, on the long side?
Yeah, definitely. I mean, metals, you have to be a braveheart if you are a trader. But if I'm an investor, I think next 1 year should be very good for metals because globally everywhere there has been an interest rate cut and the governments are supportive of the infrastructure spend, barring China. So that's the only brought out there. To that extent, I think for India, you should be focusing on domestic-centric metal producers, and there I think a company like a JSW Steel or Jindal Steel and Power looks pretty solid. So any declines out there can be bought into. Hindalco was doing very well, but unfortunate incident at the Novelis plant, two fire broke out there, so nothing can be done about that. So that can be a bit of a dampener in the short term. But again, structurally, I think these things will get sorted out, and then they will have the insurance claim also playing out. So that also looks pretty well. Vedanta, again a risky bet, but with this Jayaprakash associate deal not happening with them, I think this is a blessing in disguise for them, and they should reap the benefits out there because structurally everything is working fine for Vedanta, except that you are not very sure about the promoter what kind of financial engineering or re-engineering they will adopt to. Otherwise, it's a very solid set of a business. So what we have been recommending is a basket of plays like JSW Steel, Jindal Steel and Power, along with the Hindalco, and a mix of Vedanta into it. What we are avoiding as of now for is Hindustan Zinc and Hindustan Copper.
Okay, fair enough. Ramesh, let me get your latest view when it comes to some of the Adani names, because they have been a mixed bag of news over the last couple of weeks. Adani Enterprise, Adani Power, of course, continue to be the main newsmakers. But what's your latest view when it comes to some of these counters? Huge PE investment coming into the group counters as well.
Yeah, Adani is always a tricky space to be in if you're going with any of the names out there, and the news flows can always surprise me. So that's the caveat out there. But I think the only one business which is very stable and doing fairly well for last 1 decade has been the Adani Ports and SCJ business. So that I think will continue to hold good. If you are a buyer out there, and again you have to be an investor in any of the Adani stocks. So that's the only counter where I think there's enough value out there on the valuation multiples and the profitability trajectory they are having. Other businesses like Adani Enterprises is an incubator kind of a business, so they keep on developing business. But again, the valuation is where things do not match a bit, and so has been the case with Adani Power and Adani Green. So that's the problem out there. Though the plans are pretty big. But we have always liked Adani Ports, and that is where the advice would be to get invested into that company.
Right. It's a scattered kind of a market, Aabha. You have, pharma clicking in. You have Reliance holding up the Nifty, contributing 6 points to the index on the green side. SBI holding the fort at 974. Eternal BEL showing signs of rebound after massive profit booking in the month of November. Dr. Reddy is helping out on the long side. But look at Novuku. This is a steel, this is a cement company. Now the top gainer as far as prices are concerned, 4.5% higher on Novuku. And this is a bounce that's coming from a multi-month low. What you see is price trying to kiss back 200-day DMA. But these are interesting names that I see. Graphite maker HEG, 2.9% higher. And from the Adani stable, you have Adani Wilmar, sadly down 2.3%. This was a block deal that happened a couple of days as well. So the sell-off there, I can't see a trend so far, but that's how it is, Aabha.
All right, you have no clear trend today for sure. Let's pull up some of the other gainers and losers, I guess, just see where some of the action is. So it's so scattered this morning, it's hard to kind of really pull out something of interest. So Ramesh, from a more longer term perspective, then let's talk about some of the other strategic bets that you're taking within the market.
So from long-term perspective, one trade is very clear that the entire BFSI space looks pretty attractive to us. But again, you have to be at least having a horizon of 6 to 9 months out there, because public sector banking space has moved up a lot. But I think still, a lot more is due as far as re-rating of these banks are concerned, which will actually happen as we move into the next financial year of FY27. So that space is very clear, both public, private, and NBFC space is looking good. You can pick up your bets out there. For us, the top counters in the public sector banking space always has been Bank of India, followed by SBI. So a mix of large cap and a mid cap. In private sector banking space, we have always liked Axis Bank for some time. And Federal Bank was a topic out there, but we have booked out because it has moved up a lot. And NBFC space, you have a decent play. You can merge with housing finance companies. Defense is another play which I think is likely to do well going forward by the time we end next year, same time next year. And what third play which we are looking constructively as of now is a pharma space. I think it has been languishing quite some time. It should likely to do well in next 6 to 7 months, and the process has already started for them. The price action is happening, and valuations are almost at a fair value kind of a level. So there's a scope of them to get a stretched valuation multiple. Cement SLG was hinting a bit back. I think most of the price correction has happened, and as we walk into the cement season of first half of any calendar year, some traction can come back out there. So it's a trading bet where you can place your bets and get a good 10-15% kind of a bump up, say 3-4 months down the line. So there the healthy correction has happened in Ultratech, SAC or the like. So but we are sticking our neck to large cap in the cement space. So these are the trading and investment plays where one can focus as of now. Individual stock ideas is always there.
I think apart from RIL, there isn't much that's happening in the mega cap space, but you could just see auto ancillaries trying to inch up on the back of a strong rally in two-wheeler stocks. Metals is doing pretty well. Hindustan Zinc, NMDC in the green. Tata Steel is taking leadership here. And of course, grow is something that Aabha regularly points out. I try to stay away, 2.7% higher. 155. HBL Engines, JP Power. I think the small cap power space is doing pretty well, led by Adani Power, which actually is a mega cap company. But after a 5:1 split, Adani Power becomes theoretically more affordable. JP Power is doing well, Reliance Power is doing well. So that's a space that needs to be watched on the long side. Apart from that, Aabha, nothing much to say. The Nifty flat as flat can be on the monthly expiry. Aabha.
All right, there you go. That's the action today. It really is all about the financials, and I know we've been talking about it to a lot, but that's really where all the action is. A lot of the financial names such as L&T Finance, Muthoot Finance, all this entire fear, Shriram Finance, etc. That's really where all the buzz is. Of course, Dharmesh spoke about some of the frontline banking names as well. So, it's what we keep talking about, but we're just waiting for some, continued up move and returns on that part of the market. No harm talking about the recent listings. I mean, there's just always some interest there. Grow is steady now, decent numbers, but, we've got the capital market play intact. Let's, even if we don't talk about valuations just for a moment, but just take a look at the trajectory post-listing. 155 right now, up 2.5% today. I think it's looking pretty decent, share. It's recovered from its rout.
Aabha, it's looking distant. It's looking okay because you're seeing it from top down. That we've seen a price of 180, 190, and therefore 156 looks good. I look at it from the point of view of 100, and then I look at 156 and I say, oh my God, it's still up 56% in a market which really is sideways to flat. So as I have said, I will just stay away from grow, not offer any value at all, and wait for 5-6 months.
All right, that's on Grove. Still a wait and watch on that one. What about Paytm? What were your views on the earnings there, Dharmesh, and how would you be looking at that stock?
Yeah, Paytm is definitely looking much better on the newest companies which have been there. And the earnings, I mean, that's picking up. They have got their act together, whatever, regulatory problems were there, they have sorted that out, and they are trying to capture more and more businesses and using the database which they are sitting on more meaningfully and in a right way. So I think that's a trade which is likely to play out. If you want, I mean, if I have to put my money on any of these fintech kind of a company, so I think Paytm stands the best chance out there. So we don't have a official, formal recommendation on it, but definitely it looks promising on the cards.
One stock that can be looked at is GMDC. Very heavy selling pressure from 10th November onwards when the stock was at 603. Now sort of a bit of a reversal move coming from 469. Remember, this is the lowest since we've seen since 5th of September. So this could be a swing trade in the making. Aabha, very strong earnings, but it's a bit of a momentum stock that came up from say 450 to 650, then a sell-off, and now some kind of sensible buying happening. No stopping Nuvoco, now 378 for you. This is the top gainer in the cement space, 6.5% higher, and very sharp volume that is coming in. I think it's after 13-14 weeks that we've seen a bit of a reversal happening in Nuvoco. Will it last? I don't know, but Bhav Bhagwan, and that's what we mark. Aabha.
Okay, and as the only one bright spot in the market today, Shah, the only one seeing some nice, big move. But it's interesting since we're betting on the structural play, but I think okay, there's been the entire defense pocket, and and then there's been the entire, I guess to some extent, energy pocket, renewables, energy, and so on. Somehow we've not seen the infra sentiment play out when it comes to some of these ancillary plays such as cement. We haven't seen that like as a larger trend, so to say. Is that a valuation piece once again, or are we just waiting for them to catch up? What do you say, Dharmesh?
Yeah, I mean, if it is a valuation play, the correction has already happened in most of the cement companies, so now they are looking pretty attractive. But Aabha, what's the realization of the fact is the growth rate in most of this company on an annualized basis is restricted to single digit kind of a growth rate. Earlier, when the build-up was there, we were expecting, and I mean, the analyst community was expecting 12 to 15% kind of a growth rate. That's a mid-teens or higher teen kind of a growth rate, which now looks very difficult, and the doable growth rate looks like to a single digit, and that is where this entire valuation mismatch came through. Entire infra space I am talking about. Even NT numbers, they were very strong set of numbers being a conglomerate they are. But again, you look at what kind of a growth trajectory they are alluding to. So that's again anywhere between 9% to 12% is where they would be hanging their shoes out in the offing. So, but that is what is keeping this entire infra play into a check. But I think as a trade, again this season has started. So this is when activities pick up as we walk into the budget, and most of the pent up spending which has not happened from the government because of elections which were there, they will start doing that, and then the traction will translate into numbers. So there I think definitely, I mean, one can look at L&T, NCC and the cement plays like Ultratech, Ambuja looks interesting from a couple of months point of view.
Aabha, the interesting part about cement is that, a lot of the price rises have been negated by capacity expansion. So regularly, Ultratech Cement and Ambuja Cement, the two top players, have announced fresh capacities, and they are trying to buy out smaller players. For the last 3 years, nobody has made money in cement, either the companies nor the shareholders. So it's a consolidative thing that's happening for the last 3.5 years, and that's the reason why these sparks that happen on individual stocks don't last much. Well, 382, Nuvoco is trying all that it can to prove us wrong, but let's see how this moves. 382 is actually the lowest since let me just tell you, it's the lowest since July of 2025. So that's how it is. Let's see what happens. But for the moment, the man of the hour is Nuvoco and maybe mid-cap IT. Emphasis is showing very strong signs. Aabha.
Emphasis has been looking good, persistent. Some of these names have definitely been standing out, even in LTI Mindtree. So a lot of the mid-cap IT names are definitely showing some opportunity as well. So that's when it comes to some of the IT names. Let's let's take a look also at some of the steel and metal counters, because again, I mean, I know this is more in line with global metal prices, but again, from the infra ancillary play, this is definitely a segment that should continue to do well. And today it's up 0.8%. The metals pack once again. Pull up some of the movers for you. What continue to be some of your top picks in this buy, Dharmesh? And how much would you say you'd go in with some of these high volatile names in terms of the overall portfolio?
So middle space, it should be there in your portfolio definitely for the, I mean, if you're looking at 1 to 2 years kind of a perspective, because all this economic tailwinds will definitely translate into larger activity, and this next financial year we're expecting private capex to also come into play, because most of the capacities which were being installed but being announced are likely to play out in this financial year, that is FY27. So they. Yeah, name-wise, I mean, we just spoke about a few minutes back. So that is Hindalco from the metal space with a blend of all the metals playing it out. Vedanta is there. And then the JSW Steel and Jindal Steel. So these are the counters which we are, liking from the space, pure metal plays.
9:34, the first 15-17 minutes of trade have lapsed. The Nifty is trying to hold 26,000 on its monthly expiry day, but the battle goes on between the bulls and the bears. A bit of profit booking on the IT index, nothing to be worried about. Banks, in particular ICICI Bank and Axis Bank, are trying to hold up the Nifty amongst the mega caps to little or no effect. But State Bank of India doing pretty well, contributing 4 points to Nifty's total. ICICI Bank contributing 3 points. Axis also doing pretty well. Sideways as sideways can be. No record highs today, and that's how the market is characterizing itself on a day like this. Aabha, in the first 17 minutes of trade, the top two traded counters are Adani Wilmar and ASK Auto Limited on the National Stock Exchange. You can well imagine what the broader markets are thinking. I think I have this theory that the markets are, ruining the mega star's departure, Dharmendra. So it's just, sideways doing nothing.
All right, Ramesh, thanks so much for joining us, and let's also welcome in Arpit Beriwal, who's with us as well this morning. Arpit, good morning. Markets incredibly sideways, but let's get your take. Let's take a look at the index. So what are you tracking?
Very good morning to all. So as rightly mentioned, Nifty and Bank Nifty has got stuck in our range. So particularly if you talk about Nifty, if you look at the structure on the weekly time frame, the structure of high lows is intact. However, from a daily scale, from last 5 to 7 session, Nifty is trading between 25,850 to 26,200 levels. So looking at the chart setup wise in the Nifty, 25,850 will be the major support zone as today being the monthly expiry. So that are the level we are watching out for. But at the same time, 26,100 is the maximum call writing activities. So that was likely to act as a stiff hurdle. So our sense is that Nifty is likely to be in this range between 25,900 to 26,050, 20,100. Whereas talking about Bank Nifty has relatively outperformer from last couple of days. On the daily scale, definitely it is trading above its short-term moving average is about 58,500, 58,600 levels. Today it's been a bit choppy between a range of 100 points. But looking at the sense that Bank Nifty major support is around 58,500, and our sense is that till it holds above that, upside can be seen towards 59,100, 59,350 levels. Having said that, apart from this, very stock specific action has been seen in this market as broader market is underperforming. So a couple of ideas that are there on the radar for a positive side first would be AB Capital. So within the capital space, AB Capital looks very strong on the chart on the monthly and the weekly time frame. Negative the formation of lower highs on the daily scale, trading a life high territory. The stock looks good towards 350, 360 levels positionally. Apart from that, second would be from the mid cap IT space, persistent system. So where the IT index has seen some recovery from the lower levels, persistent system has been an outperformer. Good structure on the monthly scale, weekly scale higher low structure is intact. Daily scale it is consolidating near 6,300 levels, but small follow up over 6,400. The stock can head towards 6,600, 6,700 levels on the long side. So these two would be ideas for the day on the positive side.
9:38 for us. Individual stocks doing pretty well. After many days and months, you see some kind of activity happening on Garden Reach Shipyard from the defense space. Cochin Shipyard also in the green, 1691. A swing trade in the making there. BEML doing pretty well. So these are defense plays which have been seeing signs of consistent profit booking. Is that a dead cat bounce? Only time will tell. But so far it's a trade that has gone sideways in the market. Apart from Nuvuku, I can't see much happening in the market. I can't even tell you some good quality names that are showing circuit level things. These are all very speculative counters. We'll stay away from them. New highs, well, I'll just stay away from naming them. Nothing in the category of stocks that we track. Aabha, I think Maruti is looking good beyond 16,000. Let's take Arpit's view. Arpit, the final FNO settlement happening today for the monthly basis. What are the rollovers telling you, and how is Maruti placed?
So if you see overall this month, as on if you see the monthly change for Nifty particularly on the monthly basis, just up by 1%, whereas Bank Nifty is also up by 1.5%. So rollovers broadly it has been in line so far around in both the indices. If you talk about auto index as a whole, I like to showcase more highlight on the auto index because auto index has been quite resilient in this choppy market where it is trading a life high territory. And I think definitely within the auto index, Maruti is one of the counters has been sideways, but a very beautiful chart setup on the weekly time frame, holding well above its 50 DEMA, though consolidating from last 7 to 8 sessions, but good base formation near around 50,500 levels. And as auto index is outperformer, the stock can head towards 16,300, 16,500. That is the previous swing high. More momentum can be seen above its previous closing. Along with that, one more counter that looks good within this space, what I'd like to add is Aisha Motors. So Aisha Motor also given a classical range we got on the weekly scale after 9 weeks above 7,050 levels, and I think the stock looks good for the December series to head towards 7,500, 7,600 levels. So within the auto pack, Maruti and Aisha looks quite positive on the long side.
Okay, what about within the power basket? I mean, I know we loosely talk about power and then renewables, but how would you differentiate, and which are the stocks that you would look at within the larger, power or energy space? Because we've seen a mix of them move of late.
If we see overall the energy basket, particularly if we talk about, so the biggest heavyweight that is Reliance Industries, that has been a good recovery we have seen in last month, slowly steadily from 1400 levels to 1550 levels. And I think look at the charts otherwise, as we've seen the market breadth has been quite deteriorating, but the selective large caps are holding the market well. So I think first from the energy pack would be Reliance Industries itself, and look at the chart setup on the monthly scale. It has given a range breakout around 1520 levels. The stock can head towards 1600, 1620 levels positionally. So Reliance is a preferred pick. Second would be from the OMC pack, that is, if you look at the chart structure of HPCL. So HPCL has seen a very good rally in the month of September and October series, though the stock has seen some corrective move in this series from higher levels, but it has given a monthly range breakout above 440 levels. And I think that would be again a favorable entry point zone for the medium term to long term positional traders. And if its stock corrects towards 440, 445 levels, that could be a good entry point with keeping stop loss of 420. The stock can again head towards 475, 500 levels positionally.
Okay, one stock I'd like to mark in the swing trade space is Ashok Leyland, 2.3% higher, and this after 5 consistent days of selling. This is also looking strong on the charts, although the numbers weren't really good on the third quarter basis. Arpit, what are the charts of Ashok Leyland telling you?
Looking at the chart structure, definitely being from the favorable sector, that is the auto index. Auto index is in overall uptrend. Look at the chart structure on the monthly time frame. Structure of higher lows is intact. Weekly scale, there was some pause in the previous week, but the good part on daily scale, it is holding well above its 20 DEMA. And as soon as the stock touches near 20 DEMA, we see good recovery. So after 6 to 7 sessions, it has negated the formation of a lower highs after almost 7 sessions. Strong bullish candle in spite of market weakness, broader market weakness. So I think a good support is seen around 144 levels. The stock can head towards 152, 155 positionally. The bigger trend is positive. The stock can head towards 152 and then positionally 160 going forward.
Back to auto. That's really where the action is. What about the agri theme? Anything from the broader markets on the back of that theme that you'd be looking at right now, Arpit?
If we see overall, as we see the overall market in a holistic view, there are sectors which are outperforming and then there are sectors which are underperforming. So right now, from a trading perspective, we have to keep a balance between long and short ideas, because such market, yesterday we have seen a brutal selling across mid cap and small cap indices, whereas the large caps are holding well. So our sense is that selective sectors such as NBFCs, particularly financials, followed by auto index and selective capital market stocks are likely to outperform, and we can create a basket of that going forward. The likes of Shriram Finance, AB Capital from the financials, from the Auto Pack, Eicher Motors, M&M, and from the exchange theme MCX on the long side. At the same time, if we see weakness has been seen in the railway stocks, particularly selective defense, consumer durables, and reality pack. So we have to also spot on these shorting opportunities for a tactical play within the reality packs, likes of Obra Reality, Crompton Greaves. Apart from that, along with that, RVNL, IRCTC. So you have to maintain a balance between these two sectors going forward in the market, because market has been very much selective in the last couple of weeks' time.
(9:45), ladies and gentlemen, the first half hour has lapsed. The Nifty holding to that very, very light shade of green on its monthly expiry. Remember, last week it hit an all-time high intraday, and that's where the profit booking stepped in. Nothing to be worried about. It's a sideways to flat trend across individual sectors. The top gainer in the F&O space is Phoenix Limited. This is the real estate play, 2.2% higher. Metals are showing signs of reversal from 21 day EMA. Look at Vedanta, look at Hindustan Zinc, look at National Aluminium. There is a bit of buying happening ahead of monthly data numbers on auto stocks like Eicher, Hero Motors, TVS Motors, Ashok Leyland and Maruti, to name a few. But it's a day that the markets are just wanting to relax, Aabha.
All right, Arpit, we'll leave it there. Thanks for joining us. Always great to get your commentary, and I think we'll take a breather for now, but we're back with more in a short while. Markets are, as Shell said, a little sleepy this morning. All right, thanks for watching.
Good morning, ladies and gentlemen. Again, a very warm welcome to all of you on Business Today Television. We are at the start of a fresh week, as also the end of the monthly expiry of